So we just finished week 31 in my small account, and for the year, we have a big pullback in the S&P 500 and the stock market overall. And this happened a few months ago back in April, and I lost half of my account. Now I'm down 10%. So instead of being down 50%, I'm down 10%. I feel pretty good about that, even though my account is red. Everything is red. Actually, let's just take a look at this right now. Every single position Friday was down big time. I was making adjustments on my trades like crazy, doing credit spreads, doing $1 wide, just risking $66, and also doing some iron condors the same way, $1 wide. And so I closed some iron condors, and I closed some positions at 21 days to expiration and took some losses there. But you can see that it was a very interesting day on Friday to close the week. Now, there's something different about this time with the market pulling back versus what happened in April. Let's take a look. So last week we talked about how the S&P 500 was extended off of the ADMA, and we got that pullback like we expected it to happen at some point, right? We were expecting that to pull back, and starting the month out, very sharp downturn. Now this is on a monthly chart, and this is only capturing 4 days of the month, right? Two days of the month, and we pulled back that far already. And this is where I lost half of my account here in April. So we were pretty much basing out on the monthly chart, and we've already hit that level again on this pullback. So right now, looking at the monthly chart, it's not too alarming, other than the fact of the time frame that this price actually moved. But what's different between this move right here and this move right here is the volatility. Let's take a look at the VIX on a weekly chart and compare the differences between the two different times. So this is what happened in April, where we had a rip up on the volatility, and this is where I lost half of my account. This is the volatility that happened this week. So you can see that there is a lot of fear in the market right now. The implied volatility is skyrocketing, and so it is a bit alarming. Even though the monthly chart looks pretty stable, the time frame that happened was very quick. So it's going to be interesting to see how Monday is going to look when the market opens. We could continue to see downturns, maybe not. It's hard to tell, but that's going to be a big indicator tomorrow, what we're going to see in the markets and how this market is going to turn. Are we going to see that comeback in the markets next week, or are we going to continue to push back down? Are we going to see that selling pressure again on Monday? And so we did bounce off the 21 EMA. That's good to see, but we need more time to see how it's going to play out. Are we going to break this 21 EMA? If we are going to break that level, it is something that hasn't been done since we started this rally at the end of last year. So that could be a turn right there. I mean, if we actually go below the 21 EMA, we could end up seeing some alarming things here, especially if we break the 50-day. So hard to say what's going to happen, but like I said, time will tell. Looking at my small account, I did close some positions. I got a lot of different trades going on. My biggest concern is the wheel strategy. I've got 3 positions on. One is on Chewy, and that dropped big time, $25 put. It's trading at $22.31 at the close. And so I'm going to probably let it get a sign and start selling calls because I'm not feeling bullish about this market. Then on Hood, the same way. I have a 21 put that I'm selling. It's down to $17.88 right now. It's like I need to get this into a call so that way I can start collecting premium as the stock goes down, from what my assumption is. With Palantir, we have earnings coming out Monday after the market closes. So that'll be interesting to see what the price action does. I'll probably write it out and see, if we have good earnings on Palantir, we could see a correction there in the stock. Could be going closer to my put. And so it's not too far away right now. So I'm not too worried about that at the moment. And the rest of these, I own Tesla. That's been a big hitter. It was a big portion of my account. So when the stocks were dropping, especially Tesla, my net liquidation's gone down as well. Let's take a look at my performance last week. I'm down $1,215 on the week. That brings my net liquidation to $11,581. And then I had to close some losing positions. So my net premium collected was negative 43. That brings me negative 9.5% on my account for the week. I mean, it was a very bloody day, as they call it on the street. So down 9.5%. But given the same kind of conditions back in April, I was down 35% on the week. Looking at 35 right here, 34.96. That was whenever I had way too much size and the market went down, and that was my price that I paid for having that size. And now I'm down 10%. So I can manage that. You know, I'm better positioned for this kind of correction than I was before. And so I'm being mindful of my risk there. So I'm down negative 27% now, and that brings me back to around mid-June, week 24. So I took some setbacks here, and you can see where I've leveled off here. And a lot of that, like I said, is Tesla. I've got 20 shares, and then the wheel strategy is bringing down my net liquidation right now. So not too alarming there. I do need to be mindful of the wheel strategy there because it is naked put options, and just making sure I can continue to collect premium there. As far as my spreads go, just to give you some data here, I'm at a 60% win rate, and I had to close a lot of losers at 21 days to expiration. And, you know, go figure, the day that I'm closing these losing positions is the day that the market decides to tank. So not very good timing for me, but nonetheless, my losses were about what you'd expect. $32. That one was 56. That was NVIDIA. And then 62. So I haven't had any that broke my max loss, and I haven't reached max loss on any of my losers. But what I need to see happen is that I'm winning more often than I'm losing. So I still have some open positions. Some of these will probably end up being losers. My win rate will probably go down because I will probably close some losing positions next week. But then again, I will be opening new positions as well. So I'll be developing my bias based on what I see in the markets Monday, and then open calls or puts as we go along. So with some of my iron condors, I closed some for losers, you know, lost $27, which wasn't too bad. I just knew that on VRT, it was very wide spreads. The market was going down. It was in the money. And I was like, I'm just getting out of this position because I wasn't mindful of the spreads when I opened the position. I was just close it and get it out of the way. I rolled some positions, the untested side on my iron condor, and I collected a little bit over 25% of the initial credit, which is something that I saw in my Tasty Bites episodes that I'm going through on my live stream, just going through that and seeing if I can make some adjustments as needed. I don't know how to capture that on this spreadsheet. That kind of complicates, you know, rolling, closing, and opening positions while keeping the same strategy. Not exactly sure how to keep track of that on here. So not all of this is updated. But yeah, if you have any ideas on Google Sheets or Excel, let me know in the comments down below, or send me an email on how you keep track of your rolls on a spreadsheet. But I collected like 17 cents per roll on the call side because everything was down. And so was able to do that on some of the positions there. And a lot of the positions are still open and out of the money. NVIDIA tanked, and that's not in the money. So I'm not too alarmed, you know, with my iron condors right now. Depending on how the market does next week, that might be a different story. So overall, yes, my positions are down. I'm down 10% on my account, but we're dealing with a very sharp correction here in the markets, a very big change in the markets. And unless you were just short a bunch of stuff, I'm sure many people lost a lot of money in the markets last week. So I'm really excited to see what the market does next week and see if we could take advantage of the volatility since it has spiked up like it has. So what is this market going to look like with implied volatility and the opportunities that present themselves here coming up in the near future, especially being short and doing credit spreads, things like that? This presents a very good opportunity, even though my net liquidation is down. So if you're interested in following me on this options trading journey, hit the subscribe button. If this video was a help to you, hit the like button, and we'll see you in the next video.